Welcome back. You're watching us here on Bazaar Morning Call on CNBC-TV18. In case you just tuned in, the SGX Nifty is indicating a positive start for our markets, about 45 minutes away for our opening here. 52 points on the way up at open. The question is whether this sustains or not after a big rally that we saw in yesterday's trading session. Now, let's also welcome Dipan Mehta, who is director at Elixir Equities, to discuss a couple of fundamental ideas. Dipan, in the past you've liked the pharmaceutical space. The last week was good for the pharmaceutical space, but yesterday again, after a bit of a flash in the pan, so to say, we saw a decline in that index. That was the only index in the red yesterday. What does a person do in situations like this? Do you hold on to your conviction in the pharmaceutical sector?
Good morning, Mangalam, and thanks for having me on your show. I think pharmaceuticals, you need to be extremely selective over here. Because many of the Indian pharma companies are too focused and too much of weightage is there in the US generic market. And over there, competitive pressures are coming in very strongly, and that's impacting their growth rates over there. So when it comes to pharma, you focus on domestic-oriented pharmaceutical companies. You could look at the MNC pharmas or even some of the other domestic-oriented pharma companies like JB Chemicals or Eris for that matter. And then I think there is the contract manufacturers. And yesterday, a very interesting deal took place in the pharma space where Suven Pharma, one of the quality, CDMO contract pharma company, got acquired by Advent, and they proposed to merge it with another company of theirs and create a giant when it comes to contract manufacturing. That particular activity or subsector of the pharma, we are very positive on. It's in line with China Plus One strategy. And clearly, I think we have strengths when it comes to developing such molecules for innovator companies. And once the merger takes place, I think there'll be a greater degree of stability in earnings because typically CDMO companies have high degree of volatility. So we are positive on the particular deal and so in pharma in particular usual disclosures here. But when it comes to pharma, you need to be extremely selective.
I guess it's that time of the year, Dipan, right, where people think less about pharma and more about alcohol, perhaps. So, keeping with that theme, travel, beverages, consumption, gaming, theaters, in that entire gamut. And this time it's come back with a big bang, right? I mean, wherever you go in the world now, everything is either full, there's long waiting periods. From an equity market standpoint, which are the companies that you like here?
Yeah, so now good morning. I think what you're referring to is lifestyle spending. And that is, I think, a great long-term secular story. And we keep on finding new opportunities over there. So recently, I think there was news that all the alcohol beverage companies, they reported record sales, much higher than COVID as well. So I think you could have a good trading rally in some of the alcohol beverage companies, just like United Spirits, United Breweries, and some of the Indian companies as well. I think they should report very good numbers, maybe from the March quarter onwards or so. So that's one segment. And then within the the travel space, look at a platform company like RateGain Technologies. I know it's expensive, but the kind of scope which is there for growth is enormous because globally, I think more and more of the travel companies, the airline companies are looking at increasing their tech spendings using software as a service, and that company certainly, comes in and meets that requirement of that. So it's an interesting company. We are tracking it closely. Again, disclosure over here. And then I think the hotel companies, we like Indian hotels, and there's Mahindra Holiday as well. I think Mahindra Holiday should report also exceptional set of numbers, given that this is a peak season for them. I would just like to avoid airlines at this point of time when it comes to travel. But other than that, I think hospitality, platform companies engaged in that business, Easy Trip Planner also comes to mind. I think all of these should do exceedingly well, and growth looks pretty decent for the sector as a whole.
Dipan, hi, good morning. Two other pockets. One is PSU banks, which came back roaring, right? The index itself was up 7%, and then you had names like IOB, Union Bank, Bank of India, 10%, 12% gains yesterday. So Wayne there. The private financial names, Poonawalla Finance saw a very large gain. Motilal initiated coverage, the stock ending about 14-15% higher. So these two kind of the PSU bank space and Poonawalla Finance, if you have a view.
See, I think Poonawalla Finance, once the change of ownership has taken place, there's an increased degree of interest. The main raw material for an NBFC is the capacity to raise resources, and the street feels that with the Poonawalla brand and stamp, this company can certainly raise cheap resources. And it's more or less cleaned up its books and now it's focused on responsible lending. So you could see re-rating of the price to earnings, price to book ratio and decent earnings growth as well. And these are great times for banks and NBFCs as well. So I think this company should do exceedingly well over the next few quarters or few years as well, until perhaps some crisis again reemerges in the banking NBFC space. Within the PSU banks, I think we are seeing that one-time adjustment to mean levels averages taking place, and this correction, or I would say this move up in price to earnings, price to book is still, I think, got maybe 15-20% way to go. And that's why I think there's a trading rally in all PSU banks. And mind you, December quarter numbers, March quarter also will be exceptionally good. And that certainly will bring the focus back into earnings for these companies. And so long as they're able to generate that 10-12% type of a credit growth, I think these stocks will remain in focus. And you could see them doing pretty well over the next 2-3 quarters or so. But these end of the day, these are trading bets and one doesn't have visibility beyond 3-4 years for such companies, given their track record and the kind of structure which they are in.
Okay, do you track MapmyIndia by any chance? CE Info Systems?
Yeah, so we've been invested in that company from the IPO stage and very, very disappointed. I think the numbers also which came through generally were below our and street expectation. And really the operating leverages are not kicking in for whatever reason. I don't know. I'm sure you'll ask them that question. And on the whole, I think despite auto doing as well, and that's a big component of their revenues, despite auto doing as well, I think the company is not reporting numbers to its true potential. So I'm a bit disappointed since listing how the stock has traded, but I still have the conviction in the stock. It's an interesting business, another platform company, and great scope to expand their operations and offer new products. So let's see. I think it's a long-term story. But clearly, I think we have seen a shrinking of the price to earnings multiple and overall re-rating of the growth prospects of the company.
Okay, you won't have to wait too long to find out because we have the management with us. In fact, the stock this year has